Hi, welcome to the Market Alert for Wednesday, the 1st of December 2021. So, Powell sparks taper tantrum bond screen policy error. Well, that escalated quickly as the subhead, it certainly did, and it did so in the silver market as well yesterday, which we'll look at in just a moment. Another headline regarding this news, Team Transitory is dead after Powell says time to retire word transitory regarding inflation. And this subhead is quite interesting, as it says here. An army of macro tourist experts exposed as clueless. These were economists on Twitter who have been exposed, saying that they were posting graphs showing that inflation was transitory. But then again, they're just, accepting the mainstream narrative of Powell and just basically, they're repeaters. They're just repeating what he says. Stocks, bonds and cryptos crushed as Powell threatens accelerated taper. So not only has he admitted that there is no transitory inflation, but he's also now said he's going to accelerate the taper. That's incredible, just a week after being re-elected, or renominated, I think is the word. It is appropriate to consider wrapping up the taper a few months sooner. Well, good luck with that one. We'll see how that one pans out. And back to inflation. Euro area inflation smashes expectations, soars to record high ahead of critical ECB meeting. While energy costs and statistical effects can explain the bulk of this month's jump, today's reading also revealed some stronger than anticipated underlying pressure. Well, what a surprise. This is exactly what the central banks want. It's their only way, or their last chance saloon, to get out of the debt that they've created, is to hyperinflate it at the expense of crushing the middle classes, and well, not even the middle classes, every class, more so to the poor and the working classes who are on minimum wage. It's going to be utterly destructive. Well, it already is, but that's the game. That's the game they're playing, and then people think that the government cares about them. They're delusional, completely and utterly delusional. Anyway, more news today. We've got all the way through, we've got these high impact news items. We've got the ADP change at 1:15. That's going to be an interesting one because that's a precursor to Friday's non-payrolls. Bailey's speaking at 2 p.m, 3 p.m. Powell is testifying again, so that'll be another interesting afternoon. An ISM manufacturing PMI also at 3 p.m. So we'll watch the DAX and the Dow at 3 p.m. Could be slightly hairy. And then we've got Treasury Secretary Yellen. She's speaking. I don't know why she's downgraded to a medium impact. But crude oil inventories as well out, showing a draw of minus 1.5 million forecast there from last week's 1 million surplus. Again, we'll see what happens there. Quick look at the gold silver ratio whilst we're here. We're at 77, the market holding at this level from yesterday. We'll get into that in just a moment. Let's start off with the Dow. So in the Dow, we see prices trading down to the 89% yesterday, and the 200 MA, the market holding at this level, and we're seeing there a bit of buying starting to come into the market overnight, trying to bring it back. It's a matter of just marking up on the upside where it's likely to find some sort of support. This is the you can see there, these lines here automatically highlight where the market's left behind a high, and down here a low, so I can use these to automatically pick the right bar for any retracement to the upside, and there is the upside targets for the Dow should it move to the upside. But don't forget, Powell speaking later today. In the 30-minute chart for yesterday, you can see they brought the market up until Powell started to speak, back to Monday's low, and then once Powell started to speak, the market was sent to the downside. As you can see there, it's traded sideways in a range and is just about managing to break through at this time, although it's got to take out this high here where we've got some supply that came in during yesterday's session, and we also need to get above the DP and the 50 bar EMA there in order to make any progress on the upside. In the German DAX, this too trading down to that 89%. We left below a new low for yesterday. Got a lot of support here, as you can see, quite a number of lines converging that go back in the chart. So you'll see them down at the bottom there, going all the way back to May. Brought all the way forward. You can see there's 2 or 3 lines there that show major support for the DAX at this area. 89% as I say yesterday, and the market looking to move back to the upside. They're all lower highs on the way back up. So from this high down to yesterday's low, which we can see there, we've got these levels. We could do with actually adding on this occasion under fibs. I can just spot them. Then we'll add in the 38 and the 50 as well. So let me just redraw this from this high to this low, and there you can see, which is very interesting now because the 38 ties in with the 5-bar moving average and the 200 MA there. The 62 is tying in with the 50, and the 78 is tying in with the 20-bar moving average there as well. But at the moment the market consolidating, a lot of volume for yesterday, and we're oversold in the stochastics as well. So the market looking for some sort of news to give it a bit of a bounce there in the daily chart. In the 30 minutes, as we can see here, yesterday we had the sell-off overnight. The market then just really traded sideways until the afternoon, when lunchtime we can see 12:30 there, the market breaking out, trading back up to the previous day's low and S1 before prices then traded back down as Powell spoke following the Dow. But interestingly enough here, if we just get the fib tools, just remove the extend right. So from this low to this high, you'll see the market coming back to 89% now. A bit of a mishmash there, but you can see there 89% is exactly where the market stopped before it has found support and then started to move back to the upside. Just remove this and drag this across, and you'll see that the lines, it's got resistance here. There's two areas of resistance it needs to take out. Again, these are real price resistance levels from all the way across it in the chart. Like I say, they're automatically found and displayed, and we've got to take this high out, or these two highs, which is actually this high because we've already taken this one out, and the one that goes back in the chart many weeks. So that's where we are in the bigger picture of the DAX. I just want to actually have a look at where we are going forward today. If we have any attempt to the upside, you can see that we're quite a number away from the high of yesterday. It's easy just to grab this and then do this. We're 171 points away from yesterday's high, so there's a lot on the upside for the market to move higher should it continue to do so, certainly to get to yesterday's high, which is just say probably ballpark 200, which takes you back to the 200 as well. Failure to do this, we've got a lot on the downside. Take out the DP, got all of these support areas to take out as well. Let me just reset the chart so you can see them. Got all of these areas here as well on the downside, all the way down to yesterday's low. So there's a lot of support through here. Let me just redo that through this area here as well, if the market does move to the downside. So watch for those buying support areas. Again, you can use the fibs as well, and you'll find from these sort of lows to here, again you'll see 62% at the DP level as well, for crucial area, and you've got the 50 and the 20 as well. So once you start playing with this, you can actually build up a really good picture. And one thing that an advantage for me in doing the market alert is I'm forced to actually do this. But if not, I wouldn't be trading this market until I'd been through all of this, marked it all up, looked where the support and resistance areas. I wouldn't just turn up and start trading at 8 AM because you've got to know where you are in the bigger picture and then work your way down into the time frames, all the way down if you were going to trade a 2 minute. This is yesterday's, and when we saw the market sell off overnight and we could see them buying back in, we're oversold. We've got divergence as well in the stochastics. This is being written at the moment, it will be automatically highlighted, and you can see as they move the market high, we've got all of these S's, and that's supply, and that's showing that they're actually having to absorb the short stops in the market as it moves higher. And then you will see them trying to hold where you've got demand as well, trying to absorb the orders, and then eventually that will find its place as we've got support here and across here, and we're at S3, which is a very important area. And then we saw the DAX open for the session. It wasn't that wild, but we did see the market moving to the upside. Again, we see them coming in, see them supporting here in the trend. So we've got the market up, pulls back, we've got the demand coming into the market, you've got the pullback here before the market attempts a double top until they get selling coming into the market. It's very subtle, but it's there. And then the next bar as well is highlighted even more with the volume at the average, and then the parabolic exchange close above the 5-bar moving average, and down we go. And again, you see them absorbing a few orders along the way, trying to hold the market until eventually we're oversold, and then the market comes back to the 20-bar moving average. We then go red again as the momentum switches and the market comes down. And you'll see this all the time where there's demand. You can see that's an 89%, the market goes back, pulls back, and then again you'll see sort of selling and crossover of stochastics. That's what the diamond is. And the market coming back again, you'll see demand where it's oversold. So what I'm adding into the software now is all of the clues of what the professionals are doing, how they're manipulating the markets, moving the markets. And you can see it through the afternoon. People say about sideways channels. If I just draw this across, you can see we've got selling there. We've got demand coming into the market there. We've got subtle supply coming in there, and then you'll see with the parabolic it changes colour and matches precisely what's going on. We have got an up bar there trying to break out, it fails, and then again we see it switch, we see them buy back, and we haven't got the supply on the top side of this, but believe me, if I change the settings on the supply I could pick them up. It's just that I have 100% of the previous bars volume. It has to be greater than 100% or more of the previous bar's volume. What do I mean by that? Well, let's just take a look at this example here. Let me just spread out the chart and I will show you and highlight it. It's really subtle. It was something that I spotted and have since written in. So this bar here that's got the S, we've got supply. You can see there that the volume is greater than the previous bar, but the previous bar's range is greater. And it just means that they're holding the market there and selling. I mean, it's actually the S1 in pivot terms. So there's resistance there to get through. We've got resistance to the left in price terms as well. And then we get a switch. The market closes below the 5-bar moving average. We get the parabolic change. The market comes down until they start to support it in a range, or the algos are supporting it. And you can see this pattern all the time through a sideways range. You just got to know what it is that you're looking for, and you'll see that when it fails quite spectacularly as the market then breaks out of its sideways range. Let me just redo that. So there's your sideways range, and then the market's already preempted coming down, and then you get the selling coming into the market, and the market then trading down to the psychological level and the BRN. It's oversold. We then switch back and then bring the market back. Where do we bring it back to? Well, we just get the fib tool from there to there, and we come back to 78. So there's a repeatable pattern all the way through any time frame. Doesn't matter what it is, as you've seen in the alerts, whether it's daily all the way through to 2 minute. And these are just small scalping trades all the way back. We then have the stochastics cross, which is the diamond. We see them cross, and we're overbought. And then we're not just trading this on its own. It's not in isolation. We've got volume, we've got the averages, we've got the parabolic, just to confirm everything. And you see then we close back below all the averages, and the market moves to the downside. They try to buy back at the S2 because taking profits because they're shown here. You can see it here, but the market fails to move higher, and then it resumes and then moves down towards the S3, where we know 90% of the time the market will find support, and it does exactly that as we see here. And again, we've got divergence in the stochastics as well. If I could get this to draw it in, it's for some unknown reason it's not playing ball. There we go. So there we can see prices are lower here, but the stochastics are starting to rise. We're at the S3, and we start to see a change in the parabolic. And then what you can do, once you're in a trade, you can actually switch to a bigger time frame and then hold the trade longer as well. But I would say I'm in the process of recording videos on all of this. So let's have a quick look overnight, see where we are. See prices have been moving up, and a bit of a ramp up before I started to record. Again, coming off a crossover, overbought, buying coming into the market there, and then blasting through the resistance, which you need. Again, you've got your sideways move showing where the demand and the selling is taking place, and you can see that quite clearly. So again, it's highlighting those areas. Some bit of demand coming in at the market at the moment. To try and hold it, you can see how that is occurring, because the range of this bar is less than the previous bar's range and the volume is greater. But at the moment it's just sideways. Anyway, let me move on. I'm taking up enough of your time. Let's just have a quick look at the metals markets, if I can find them. There we go. Start off with silver. Very interesting day yesterday, which we'll look at in more detail at the moment. We've also got demand. We're oversold, so the market has the potential to move back to the upside. This is the first swing that the market's left behind, so I would be inclined to draw from here down to yesterday's low, and I can see there that we've got also resistance in this area of the 50 bar EMA. Also, you can see all of the red dots on the downside there as the market switched. We were oversold here, the stochastics crossed. We have the 200 MA, that is. I need to change the colour back to black on that one. So we got right to the 200 MA at $25. Struggling, sorry, not, yeah, just on, yeah, went through 25. And then you can see how it switched once everything lined up, and now we're on the other side of this with the market finding support. So let's see where it's finding support, shall we? This is the last low that hasn't been taken out by prices. These are automatically drawn in, as I said earlier, so I can just choose one of these lines, and I'll go with obviously the latest one there up to the high. I can see the high, I've got the red line there, so I know exactly where to draw from, and we stopped at 89% on the overnight. So let me show you this on an intraday basis. We'll start off with we'll go with the 5 minutes, and you will see at 1:55. Let me just activate this so I can drag the chart. So at this area here, we're oversold. The stochastics have crossed, and we can see them buying in after they've sold at the previous day's low. They've just nipped below it, and that now forms an important low, but that low also ties in with, and like I say, it doesn't matter whether it's whatever the market is, that low ties in exactly with the 89% in the daily chart, which is oversold, stochastics have crossed, and we've got demand. So when you start putting all of the tools together, linking them all together, it's easy to see where you can actually buy in the smaller time frames to take advantage of the great risk reward that these trades offer. But unless you know where you are in the daily chart, it's very difficult to actually assess. If I just put up the 5 minute chart, you wouldn't have a clue. Certainly if I removed the pivots in the previous day's close and lows, etc., you wouldn't have a clue why it's done that. But as soon as you look at the daily chart, you go, 89%. It's as though if the market comes down to 89%, go into the 5 minute chart and you'll see exactly where it is. It doesn't matter whether it's the 5 minute and even the 30 minute. Again, you can see the demand over 30 minutes. And what's even more important here is that from there to there, it's a new low, but the stochastics are rising. So you've got demand, rising stochastics of divergence, yesterday's low, and the market then starts to move higher. And now we can see exactly where we are. We're coming back to the 23 range. We've got resistance at the 23 because somebody's just come in and sold, which you'd expect. Profits are taken from there to there. If you're trading thousands of contracts, it's a good profit. Believe me, with $5,000 an ounce, so you're making a good profit on this area. But in order to get through, We need to drive through this area. You've got your DP as well, and you need to then continue the market to the upside. You've got your 200, you've got your previous selling area, and that's something I need to come to. Actually, I've got carried away here. Yesterday, sorry about this, getting carried away here because I wanted to show you some of the new stuff. Yeah, the taper tantrum. This is the metals market's reaction to this yesterday. Let me go back to the 5 minute. I do apologise, just got carried away there. Easily distracted, as they say. So yesterday, Powell makes the statement about inflation not being transitory, but JP Morgan and Co were having none of it. As soon as we got to the R1 from the previous day and the previous day's high within earshot, again you can see stochastics overbought, diamond for the crossover. I haven't got the parabolic on there, but it switches here and then moves back to the downside. Incredible, isn't it? So again, it highlights exactly what was happening yesterday, but that was just Powell. Again, you can see the sideways move. It's all highlighted for you, where they're buying back in, the subtle moves, etc. Quick look at the gold market, and again, you can see similar thing yesterday as well, up and then back down, oversold at 89%. I've done the same thing overnight. Dollar. Yesterday was moving down sharply. They brought it back. You want to see how quickly they brought it back? Take a look at this. All of a sudden the dollar is screams back to the upside and then hits the R3, same as the S3. 90% of the time the market will stop in this area, and then it's traded back, and now it's towards yesterday's close. Anyway, that's it for this one. I've gone on way too long. Apologies for that, but there's a lot of interesting stuff coming down the line, as you can see. So, like I say, hang in there. And as ever, thanks for watching. See you in the next one.